Hello and welcome to a brand new edition of Let's Talk Money. I'm your host, Surabhi Upadhyay. Now, the cost of higher education is rising rapidly. It's rising in double digits in many parts of the world. And also, the inflation is quite real here in India. The annual cost of actually studying overseas can range from anywhere between 20 lakh rupees to as much as 50 to 60 lakh rupees a year in some of the markets like the US. Therefore, on the show, you guessed it right, we're putting the spotlight on how we definitely need a plan to fund the higher education dream, either if it's for yourself or, of course, for your child. And joining us to decode this rather complex world of higher education loans for India or for overseas, we have with us Radhika Binani of Paisa Bazaar and Ankit Mehra of GyanDhan. Ladies and gentlemen, thank you so much for joining in. Radhika, welcome back on the show. And Ankit, it's a great first appearance, so we're looking forward to this call. Now, Ankit is someone who, as a founder of GyanDhan, is really in the thick of this because I believe, Ankit, that your platform provides advisory services to students as well. You're into funding as well. So let's start with the big elephant in the room. Given what's happened with tariffs and President Trump taking office, what is the mood like out there? Because every day there is a new headline on visas, the availability, interviews not happening. So, how have students and the whole community responded so far this year?
You're right. I think there is an element of fear out there. I think, and it gets perpetuated by yet another tweet or yet another article that comes out. I think, and going back to your point around the cost of education is fairly high. So if anyone is going to invest 60 lakhs a year for 2 years, they would want a return out of it. So I think the concern right now is people are genuinely fearful in terms of what will happen once they graduate. And in some cases, will they even be allowed to graduate or not, right? I think some of these concerns are not really grounded in reality. It is just a fear factor being perpetuated. I think our belief is, and that's what we counsel students as well, is I think this is just an initial Trump rhetoric that might pass on. There are certain elements that students need to be cautious about. So I think our basic tenet or request to the student is try to understand what course are you going for and try to understand the return of that course. Try to assess whether you will be employable once you get that degree or not. I think that's the most important thing. But yes, to your point, I think in the first quarter of this year, when we talk about the US visa numbers, they were down some 30-odd%. So the volumes are definitely down. In the US specifically, the issue also had to do with the fact that the visa offices were closed. So there were multiple factors at play. I think by the end of the year, we do expect that there will be some kind of normalcy that will return. And we expect that the fall 26, which will be the August 26 intake, will essentially be a resumption of normalcy.
Okay, well, fingers crossed. And hopefully, even we don't have too many additional negative headlines and the visa issue doesn't spiral out of control. But I'm just curious, before we start talking about the financing part of it and the planning part of it, what are the trends saying that in the last 12-odd months, because so much is happening with the US, are there other geographies or newer geographies which are now attracting Indian students?
Yeah, so that definitely what's happened is there is a substitution effect. So if I was a student who is planning to go abroad for higher education, there are two sets of students. One set of students who are intent on studying in the US for some reasons. For them, it's really a case of either they have to make that decision right now or they might choose to defer it by a year.
Sure.
But a large chunk of students are then saying, hey, what are the other alternatives? And what we're seeing right now is mainland Europe, specifically Germany, and then the other countries like Italy, Spain, France, they are emerging as new hotbeds of higher education. So we are seeing students who would have otherwise gone to US looking at Germany as an option, looking at Spain. Even stuff like UAE and Japan are emerging as kind of destinations of higher education. So we are seeing some non-traditional geographies getting benefited outside of the top four. So traditionally, when you look at higher education, you had the top four, which was essentially your US, Canada, Australia, and UK.
Yeah.
Now it's becoming more like a top 10 or a top 12 with these other countries coming into the picture.
Okay, all right. So those are the initial trends with which we're setting context to this conversation. Radhika, now let me come to you because it's time to start talking money because all of these aspirations and dreams, they need to be funded, right? And as the numbers were just telling us, the data that we put up on the screen, the numbers are fairly significant. Now, as a parent, I think what comes to mind is that all parents have their own savings kitty and they have their investments basket. So The first question is, what is the balance? Should I be using a part of my investments to, fund my child's higher education? Should I be taking a loan? What's the right mix? Do I do both? So what's the starting point?
The first starting point is how much early are you thinking about this question? I think that's when the good answer will emerge. Otherwise, if the child has to go next year and you're thinking about it this year, the options are very far and few between. Assuming that you have given yourself a certain runway to be able to plan that, it would be a mix, really. There is no real answer. It will be a mix of your long-term savings, of potential scholarships, and some amount of funding through, say, part-time jobs that the child can suffice with, and of course the education loan. I think I sent my child last year to the US, and we did a mix of all of these to ensure that we are able to manage within a certain larger financial plan that we had for ourselves. As an adult and as a parent, one of the things which we need to keep for ourselves is ensuring our retirement fund is separate and is not being touched at all. So keeping that aside, apart from that, we need to use a mix of all of these three: long-term savings, education loan, and scholarships, and any other part-time jobs which can ensure that the amount can be brought into play. And other thing which comes to my mind is that we have to ensure that it is like a marathon. So the earlier we prepare, the better we are poised for it.
Absolutely. The earlier the better when it comes to all kinds of investments and financial planning. I take that point completely. Ankit, so let's start by deciding or, taking it step by step in terms of just narrowing down on all the cost heads. The tuition fees is one part of it. Then, travel, living, etc. So how do we start thinking as the student or the parent? How do we start thinking about all of these heads? And typically in totality, then what will be that cost per year, say in a mid-rung US university versus say somewhere in Europe like Germany or France? Just some ballpark estimates will help.
Yes, so if we come to the ballpark estimates, as you said at the start of the show, when you talk about the US, the ballpark estimate you should plan for is a 60 lakh outlay per year. And when it comes to Germany, that number...
And this is, you're talking Ivy League or even sort of mid-level institutions?
This would be a mid-rung institution, because when it comes to the US, I think two factors are at play, specifically in the US. One is the location, because a university in New York versus a university in North Carolina will have very different cost of living expenses. Right. And then the other factor will be the low-rung university versus the highly ranked universities and so on and so forth. So the key thing really is in the US, if I had to say, on the lower end, you could probably get by with a 35 to 40 lakh budget, but practically you should aim for a 60 lakh budget. If you're talking about the Harvards of the world and MBA, the annual cost will probably be closer to 1.2 crores a year, right? So that's why kind of a safe estimate would be a 60 lakh on an average. That cost reduces drastically when it comes to Germany, where the cost would probably be in the range of a 20 lakh is what you need to plan for, 25 lakhs. So I think that is the first thing that you need to think about in terms of costs. Like you mentioned, one of the things is don't think of tuition as the only living, as the only cost of education. So what many universities have is they have a cost of education page. So they basically list out, hey, this is the tuition fees, and then these are the typical other expenses you would need to have. So general rule of thumb would be your tuition expenses will probably be anywhere between half to 2/3 of your overall cost of education. So working backwards, if you have the cost of tuition, either double it or probably increase it by 33% or so to get a total cost of education expense.
So what are the other heads that we must kind of take off in the head? Obviously living expenses, but what beyond that? So tuition and living are the two main components.
Right.
What else will probably come up?
Right. So insurance will be one factor at play. There could be, depending on the program, there could be exchange programs that you might want to enroll into. There might be immersion programs that you might enroll into. There would be the fact that you'll have to get stationery, laptops, blah, 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 all the natural living expenses additional to kind of help you with your education. So I think those are the typical cost items that you would need to budget for.
Okay, all right. So it's really money, and we need to plan for lots of it. So Radhika, coming back to you on that point about using some of your investments or savings and then starting to look at loans. Now, typically, how do lenders look at this? I mean, what is the criteria that they follow in giving out a loan. And I mean, the size of a loan, the interest rates obviously perhaps are market linked. But from a lender's point of view, what makes a suitable candidate?
Yeah, the lenders look at the profile of the admission. So when you go for an education loan, the first question is it a STEM course? So I think there is a higher bias towards STEM courses because they naturally are a income generation kind of courses post the completion. Then they also look at which country, because the political stability, all of that comes into the picture in that sense. So for example, if you're applying for a Poland versus say Germany, I think that kind of a difference kind of thing. And the third is, of course, where is the ranking of the institution? So I think each of the bankers have a implicit ranking of the top 200, 300 colleges. So where does your institute stand and what kind of a student have you been? And if it is a big plus, if you've been offered some kind of scholarship, even if it is 5 to 10% of your tuition fees, that goes as a positive towards you. So these are all the softer part of it, which is looked into for education loan. Apart from, of course, any lending kind of a loan process, that would be what is the income, if the parent is a co-guarantor, what's the income of the parent, and if the loan sizes are above a certain amount, then you need collateral. What's the kind of collateral that you have, and what will be the repayment tenor? What are you looking at? Whether you want to start paying the interest immediately, or you're going to start paying at the end of the 4th year or the 5th year, 1 year post your completion. So all of this goes towards your loan evaluation.
Okay, Sab, you raised some important points there, whether you have a guarantor or if the parent is a guarantor, which brings me to the next question. The types of loans which would be on offer. And Radhika, come in on this, because do all education loans require collateral or a guarantor? Or can I also get a loan even if I don't offer any collateral? What is the difference, the variance, and what is more suitable?
Typically, two things. One is the size of the loan, and if it's an overseas education, then if the size of the loan is higher and it's overseas education, then typically a collateral is required. So if it's above, each bank has its different limits. So I think it's typically above 7 lakhs. And if it's overseas, collateral is required. And if it's above 7 lakhs and Indian, collateral is required. Below 7 lakhs, there is no collateral required. So I may be off by 1 or 2 lakhs. It depends on bank's policy, but this is the directional kind of indicator.
Yeah, Ankit, you want to come on this? I mean, basically, we've just heard from Radhika how banks look at screening possible candidates and students. From the student's point of view, what all do I need to check when I'm applying for the loan, and what kind of a loan perhaps would be more suitable?
Sure. I think I'll just correct one thing is, gone are the days when banks would not lend beyond 7.5 lakhs basis without the collateral.
Okay.
So at this point in time, the landscape has changed drastically over the last 10 years. At this point in time, there are banks who have loans without collateral options. So as Radhika was mentioning, depending on the profile of the candidate, what kind of course are you going to? Okay. Is this a STEM course or not? Is it to a top-ranked university or not? You have lenders who are giving out loans in excess of 40 lakhs, 70 lakhs, unsecured.
Unsecured loans?
Yes. So these are unsecured loans.
Okay.
You will have to have a parent as a co-applicant, as a guarantor, but you don't really require a hard collateral.
So just having a guarantor, parent as a guarantor could be sufficient.
So what the lender is trying to do, and that is what we do at GyanDhan, is try to figure out which is the best lender. But what the lenders is trying to ascertain is, what does your future employability look like? And if your future employability odds are high, then we are at a place where you can get loans without collateral with a guarantor. And there are international lenders who even give out loans without guarantor as well. So technically, if you get into a top-ranked university, if you get a loan from an international lender, you will get a loan without collateral and without a guarantor.
Oh, okay.
Now, coming back to your point around what students should look for, I think the first thing the students, when they're looking to apply for an education loan, is they should check their CIBIL scores.
Of course.
The credit scores for themselves and the
co-applicants. Parent also, yeah.
Because what ends up happening is, sometimes students might have taken these short ticket loans and they might not have repaid, and that might adversely affect their credit scores. So they should be on top of their credit scores when they're applying for a loan.
Sure.
In addition to that, outside of that, really, there is a standard list of documentation around your KYC and around your bank statements that you need to be having in place. Depending on the loan you're applying for. So if you're applying for a collateral-based loan, that's where the technicalities come into the picture. Depending on the region you are in India, you might have different requirements on the collateral documents that are required. So that you can get in touch with an advisor who can help you figure out which kind of documents are the relevant documents needed to apply for a loan.
Okay, all right. That's one part of it answered. We do have to take a quick break. On the other side, there's more to this conversation because remember, if you're going to study overseas, foreign exchange is going to play a part. Now, how do you manage that risk? We'll discuss it after the break.
Let's talk money.
Welcome back. This week, we are discussing financing and planning for your higher education expenses, whether in India or overseas. And if it's overseas, then definitely the way foreign exchange behaves is going to play a part in that entire planning process. We're in conversation with Ankit Mehra of GyanDhan and Radhika Binani of Paisa Bazaar. Radhika, let me take up this particular point with you, the Forex point, right? Because if I've borrowed, say, 60 lakh rupees, just because of currency depreciation versus, currencies like the dollar, I could be off. I mean, my estimates could start going off themselves. So how do I account for this? And how do I try and manage this risk?
Yeah, that's an important question because Forex can itself increase your outlay by 10 to 15%. And that's the trend we've seen across many of the at least the top currencies against INR. One of the ways that you can do, assuming that some part is financed by your own funds. And for example, one important point, even if you're taking an education loan, there will be some amount of margin money which needs to be paid. So if there's a 100 rupee fee, 85% is typically paid by the bank, and then there's 15% which you have to fund through your expense for your own money every time there is a disbursal happening. So when you're paying money, whether through along with the loan or through completely funded by you, there will be a foreign exchange risk that it's subject to, because also it's typically around 3 to 4 years down the line. So one way of managing it is to create a corpus in the foreign currency in which the final outgo needs to be made. You could create a deposit account or a ETF, very low risk kind of investments in the foreign currency, and that would help you to be able to take the money out when it is required, when the payment needs to be made. And the other part is that you could ask the student to be able to move the corpus into the account and then take it out at any different points of time. The reason why is every time you transfer money, there is a cost of transferring money also. Apart from the exchange risk, there is a cost. Yeah. So whether it is $1,000 going or $100 going, there's a $15 fee for remittance. So avoid both the scenarios, to also a foreign currency risk as well as the transaction cost. It is always better to have a corpus of 6 months or 1 year, which is in the foreign currency of use.
Okay, got that. Ankit, you want to add anything to this? And you were also mentioning taking the loan itself in foreign currency. Yeah. Tell us how that works.
So there are international lenders who will give out loans in the domestic currency. So you will have international banks who, like Discover in the US, who might be giving loans for certain categories. Okay. There are international lenders like Empower, Prodigy Finance. These are agencies similar to NBFCs in India, okay, in a sort of way, who will give out loans to students, international students who are going for studies in the US or in the European markets. So I think those would be areas you can target. Coming back to the Forex part, I think in addition to what Radhika was mentioning, when you're planning, you can invest through the LRS scheme when you're trying to build that corpus.
Absolutely, and you can keep sort of remitting money, investing in overseas assets, and then use those assets to fund your overseas expenses. Got that point? Running short on time, but not questions. It's an exhaustive topic. But Ankit, just quickly, if you could do a checklist for us, or basically a step-by-step guide, along with the timelines. I mean, let's say if I'm aiming for the next year fall season, 26, when does all this start? The whole process, the planning, the applying for the loan, etc.
Right. So if you're applying for a fall 26, the ideal time would be 6 months before you kind of need the loan. Right. The ideal time would be you check for a pre-eligibility at this point in time. So that at least if there are documents that are not in place, you can arrange for those documents. But ideally, the process will start 4 to 6 months when you're trying to figure out which is the best lender for you. Okay. And the list of documents would, like I said, would really be your KYC documents, bank statements, more importantly, the collateral documents. because that is the place, that is the reason why I say you need to do a pre-eligibility, because that will help you determine if you need an alternate document created or not.
Okay, all right, fine. We'll keep that in mind. Radhika, any final advice, any tips, any mistakes that we need to watch out for and avoid?
The documentation can really take a long time. Me, as a being in financial services, took 2 months to process my loan. One other thing which got missed out is the insurance. The person who's taking the loan, the student has to have insurance. Typically, the loan company asks for them to be insured. So that's another document which was the last minute surprise that we were slapped with. So that would be something which would be good for people to know.
Okay, start early, start planning, start investing, and definitely be very meticulous with the entire documentation purpose. I think that's the gist of it. And it's a good starting point for our viewers as well who are thinking of overseas education for their children. Thank you very much, Ankit, as well as Radhika, for joining in. Very helpful and insightful conversation. Well, viewers, that's it on this week's edition of Let's Talk Money. We'll see you again next week with another theme. Till then, keep your questions and comments coming in.